In today's episode, we're going to focus on the Pi cycle top indicator to better understand where we're going to peak in this bull market for Bitcoin's price action, but not first without talking about some of these key dynamic levels of support. One that we actually saw get tagged on this recent downside wick, and what does that mean for this trend and for the incoming crossover months still away. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward, and let's dive right into the video. But first, a quick message from our sponsor. Our sponsor for today's episode is MEX, and MEX is a no KYC exchange that offers the most trending tokens, everyday airdrops, extremely low fees, and comprehensive liquidity. MEX is the home to over 3,000 tokens listed, which is the highest among all other CEXs, and the best thing is a lot of the new and high potential projects live there exclusively. MEX also offers comprehensive liquidity to ensure smooth and seamless trading and low fees, which are close to zero for spot and futures trading, and you can participate in a wide variety of special events as well as receive everyday airdrop rewards by only holding 25 MX. And to celebrate our partnership, we're running a very special welcome offer. When you sign up using my link, you can get a 20% deposit bonus of up to 500 USDT tether. But hurry, the clock is ticking and this is a limited time offer, so make the most of it while it lasts. Sign up to MEX using my link in the description down below and get your 20% deposit bonus today. Thank you very much, MEX, for sponsoring this episode. Let's dive right into it. The Pi cycle crossover is a really great indicator for timing Bitcoin bull market tops. And when it comes to this propagation of the moving averages, this is a new feature on the website here. This can be quite a useful propagation to better understand where we are in the cycle. We'll be talking about that shortly, but when it comes to general basing in and around this moving average here, you can see that we've recently tagged this support here. And generally speaking, whenever you see tagging of the support or basing and ranging below the 111-day moving average here, anything in and around that region and ranging below it, that tends to be a downside deviation and generally speaking a bargain opportunity in a bull trend, because obviously in a bear trend we're going to be just drawing down for extended periods of time, and we're going to be going to lower and lower lows in bear trends. So it's all about a bull market and understanding how we see this moving average play as a support and how does that factor into this bull trend. So downside deviations below the support, that tends to be a bargain opportunity, rebounding from that region, and also we're finding a support here once again. And the fact that we've not spent too much time here at this Pi cycle moving average, that just showcases a lot of premium buying behavior. And this is also visible in the higher low that we're seeing here in the price action. So not only premium buying behavior, but aggressiveness in that buying behavior, because we've seen a strong buy side move up, and this is quite a long downside wick, and these long downside wicks tend to occur at local bottoms at least. So strong buy side here. I think if we are to gain a bit of worst case scenario, we will gain a bit of downside deviation below this moving average, but I don't know if we're going to be that lucky in this instance. At the moment we are finding support here, and that tends to be the case across bull cycles. You can see that in the 2021 cycle, for example, we find a lot of extensive support at the Pi cycle moving average indicator, and 2017 is also a fantastic indication and example of the Pi cycle moving average acting as a support throughout time. So bull market trends continue. The historically recurring tendencies are still continuing when it comes to this bullish moving average. But when it comes to the crossover, really important to talk about how this crossover is scheduled for October 2025. And what's interesting about that is that in the previous video I made a few weeks back, this crossover was scheduled for December 9th. And because we've seen a slight uptick in price action, this already has been brought back a little bit into the future by really 2 months, 2 whole months. And that just showcases how this crossover in general is quite sensitive to moves in Bitcoin's price action. Small upticks in price, relatively speaking, can bring back a crossover by 2 months. And at the same time, if we're going to see, for example, downside deviation below this moving average and some basing for a while below that moving average, then I'm sure this is going to kick the can down the road, and we might go into December again and maybe even go into 2026. And if it does go into 2026, you'll probably notice that that's a little bit overextended to the upside, which means that we'll be closer to a reversal, because we're not going to be peaking in a typical bear market year, which is 2026. So we're probably, now that we've seen this get pulled back into the future, it's October. Once we start to rally once again, this is going to be brought back into July, August time, and if we really rally extensively, maybe it brings us even into June. So that's really interesting to talk about that. But the fact that we're in October right now, that really does tie in with historical price tendencies after the halving, because historically speaking, after the halving, we tend to peak either 518 days after the halving, as was the case in 2017, and as was the case in 2021, we peaked a little bit more than a month later, so 550 days after the halving. So whether it's 518 days here or 550 days, that gets us to a rough peak for the bull market for Bitcoin in September or even November 2025. So we come up with this small vertical range right over here. And what's interesting about the Pi cycle crossover right now is that this is bang on with historical price tendencies, bang on when it comes to traditional halving cycles, October, and if we even get into mid-September, early September, then this is going to be even more within that range. So historical halving cycles seem to be repeating once again. At this moment, we're still going to be seeing shifting into the future, kicking that can down the road into December whenever we see strong pullbacks. And we're going to be bringing this figure, this crossover, closer into the future whenever we see strong rallies towards the upside, which only just showcases to us that whenever we rally strongly and this crossover gets closer and closer, then we're probably overextended in that uptrend, and we should be looking for pullbacks and dollar cost averaging moments for our portfolios. But on the flip side of that, when we're rallying strongly towards the downside, then this is going to get kicked down the road, so to speak, this crossover, which means that we're probably going to be overextending too much in terms of the downside deviation on the retrace, and we should be finding a bottom and reversing towards the upside shortly. So this crossover is going to change so many more times, but one of the things to really talk about is that at the end of the day, we're probably going to see things really resynchronize with traditional halving cycles and get quite close to them, because I know we've been talking about an accelerated cycle in this cycle, but we've since reduced that acceleration in the cycle to such an extent through this extended reaccumulation range that really, at the end of the day, it turns out that we're more in sync with traditional halving cycles than we are with that traditional, or at least untraditional, unconventional accelerated cycle theory. And also here in this cycle, there was a lot of talk and narrative about lengthening cycles, whereas actually things peaked as per 2017, very close to 2017 figures. And if you really want to be picky here, then we've seen a lengthened cycle by 30 days. And I wouldn't really say that that was a lengthened cycle, because people are talking about lengthening cycles in terms of multiple months rather than a few weeks or so. So accelerated cycle, lengthening cycle narratives, they all tend to fall short, because at the end of the cycle and at the end of the day, it always points to traditional halving cycles taking precedent. And I think it's an important thing to keep in mind, especially when we see lots of downside volatility, lots of things going on in the market that will distract us from these core principles about Bitcoin market cycles. At the end of the cycle, at the end of the day, it all comes down to traditional halving cycles and history repeating. We're going to see that crossover come into July, June on strong rallies. We're going to see that crossover get pushed into the future, into November or December on strong pullbacks. But we're probably going to find a middle ground and resynchronize with traditional halving cycles for history to once again play out with a Bitcoin bull market top in September 2025 or October 2025. And if you really want to be conservative, then just assume that we're going to peak a little bit earlier so that you're out of your portfolios and out of your positions before then, because you don't want to be exactly timing the top. You want to be out of the market for the most part before everyone tries to time the top as well. So subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.